Unlock the high returns of the expanding venture capital world right here on the Emerging Managers Podcast.
So we got another sports one.
Yeah,
I like
absolutely.
This one's a little different, right? Different sport, different model, but
It is. Andrew from Profluence, I can say up to this point, out of all the fund managers I've interviewed, he is probably the most prolific distribution of subject matter content on the internet. You go to his LinkedIn, he has got deep dives into every nook and cranny of sports, from not just technology, not just the high end. He understands what's happening at the high school team level, the youth sports team level, and where these businesses are growing. And so, I got a chance to meet him several months ago at an event he hosted in Tampa, because in addition to the fund, he has his Profluence community of, it's over 1,000 members now, of people that are actively involved in sports at all levels, from coaches to team owners to league owners to, product providers and all of that. But then I started just tracking him on social, and you got to go to his LinkedIn, everybody. If you want to know about what's happening in the world of sports at every single level, he's done the homework. So he's either up all night or he's using the best sports AI agents in the business. So, but he really comes from a good background. Obviously, he played college, high level college basketball, started this fund. He actually had someone approach him to start the fund. And now he is really expanding what he's doing, in terms of just an ungodly amount of knowledge about what's happening in sports. And now he's applying that on the investment side.
absolutely. Well, Andrew Petcash is how do I even say it? He's like the founding partner. I think that's the right term for it. He's the founding partner at Profluence Capital. And prior to starting it, he founded and exited his college sports media brand, CAI, and built a private syndicate group, Draft Day, to source equity opportunities for professional athletes. So he's been in and around all aspects of raising capital in the sports world. He's helped Profluence's media properties garner over 1 million social media followers. He graduated from Boston University with a concentration in finance, and he was also the captain of the Terriers D1 basketball team and a Patriot League champion. Let's hear from Andrew and Profluence.
Hello, everybody. My name is Scott Kelly, the founder and CEO of Black Dog Venture Partners and your host for the Emerging Managers Podcast. And as an avid sports fan, I'm really intrigued about our guest today, Andrew Petcash from Profluence Ventures. Welcome, Andrew.
Scott, great to see you again and awesome to be here.
Thank you. So before we get into the fund and what you're doing in sports, let's talk about a little bit of your background. What brought you to what you're doing today?
Yeah, a combination of two things, sports and building businesses. That's really how we got here. Played sports, a bunch of them my whole life, had the opportunity to play Division I college basketball at Boston University. And then going back a step, when I was a teenager, I built multiple big YouTube channels and then a website that I sold, and then was part of a startup that was all, early NIL and doing these college athlete deals. And so I had a real understanding always and a love and passion for sports, and then taking things from 0 to 1. And so that led to Profluence ultimately, where again, it started out as really media for the builders in sports. So grew that to hundreds of thousands of followers. So we had our own microphone. We were getting so much inbound and deal flow. Then we built a community to start bringing people together. So we're nearing 1,000 members in that. You have the in-person side, the virtual, you have all the resources database. And then you started to just see all these companies, and especially early stage ones, flock to you. And then ultimately for the first fund, Profluence Capital Fund 1, was a small test thesis micro fund, 3 million, and was incubated by just a few LPs. They're all large private equity, like managing partners at large private equity firms, a few in sports. And they were just like, hey, we love what you're doing. You have such a good touch on the early stage. So it was something I sort of didn't have on the roadmap, but it just fell into my lap and I love it. And so just by knowing how to build media and attention and distribution and data and a love for sports and that growing as an asset class, landed here, and it's awesome. So we'll dig deeper into that. But I guess like one main thing, Profluence Capital Fund 2 is on the horizon. And one of the first, he was personal investor in the first fund, but already have an anchor locked in for the second one, which we're still a little timing and negotiating to do. But so anyway, that's really hot off the press, really timely. Just learned that,
news.
Recently. And so anyway, for everyone that's listening or is involved in this game, how tough that can be at times. And so it's quite exciting to have that now as at least a base to go start and launch the second one. As I'll probably run into the full cycle in the fall, and millions of calls and all the fun stuff to make the magic happen.
Well, that's awesome. I'm glad we got to break this news today. So talk to me about the fun thesis. I mean, the reason I wanted you on the podcast is you are prolific at putting out great content on trends in sports, whether it's sports teams, sports leagues, sports tech, consumer products in the sports space. Talk about, how you're investing and what you're investing in, and what do you see on the horizon?
Yeah, so we break it into two sides of sports. So the first side we call sports IP. So that's like the leagues, the teams, the events. That's really the layer one solutions where you're going to. And so we like to have a little bit of our portfolio in that. Those aren't going to be your 100x exits, right? They're going to be more the 10, 15x. They're going to be more linear. They're more predictable, but we love those as the base layer. So we're going to do about 20 to 25% of a portfolio in that. And then the rest of it are going to be your big, more consumer tech bets, right? And we call that sports as a wedge, right? And so we like things that are sports focused or starting in sports, but can go to broader markets and really increase the TAM. So a bunch of our assets, maybe they started in sports, now they're working with the military, or then they went straight to just consumers in general, or then they went to healthcare, right? So there's a ton of great applications. Sports is a great entry. So we either call it, sports as a wedge or sports as a platform. And so that's going to be about 75, 80% of the portfolio. And Fund One looked across 16 companies. That's exactly how it looked. And Fund Two, we plan to do the same thing. But yeah, I mean, sports is this emerging asset class now. You're seeing a ton of interest, especially at the highest levels of it, right? The pro teams. We see all the private equity funds coming in. We see the sovereign wealth coming in with what Saudi Arabia has done. But there's such a gap downstream of where all these things are being started and created. And with the rise of AI and just the ability to build things quicker, tech is the commodity, but sports has the community, the passion, the IP. And so if you can see things first, you can help really get them rolling. We believe you can create huge winners in the next big things across both the IP and the tech. And so that's where we aim to live. Early stages, we're owning large percentage of these companies for relatively small check sizes because of the value we can bring. We can push them through our media and get them attention. We can build them into the events and the community and introduce them to the right people. And so anyway, that's really worked in our favor. That we didn't start out to build a venture firm. We started out to build an attention engine, a media company, a community. And then it just was a natural plug in and fit. And then on the reports, I appreciate that. One of the things was, hey, if we're going to be researching a space, we might as well we're going to understand it the best by researching it. We might as well put it public to the people that are involved in our world. And so our LPs and everyone close to it are always very appreciative. Like, for example, it will be released by the time this podcast comes out. But, we went and broke down the entire volleyball market. So it's like that took, 11, 12 hours, deep research. And then you really understand it. And now you give the cliff notes to everyone else, but it's like no one still understands it as well as us after that. And so anyway, it's been super cool of like just, building in public to some degree as well.
Yeah, that's fantastic that you spend the time to really know these emerging trends in sports. Everyone's talking about pickleball, but you're talking about volleyball and other things that really haven't been thought of as an investment opportunity or now are becoming the place where money's falling into. So let's talk a little bit about Fund One. You said you had 16 investments. Maybe share with our listeners some of the success stories, some of the trends that you got involved in early.
Yeah, it's a 2023 vintage, like late of the year there. So we're only about 18 months in. Right. But the portfolio, from a TVPI has already 2.5x'd. Again, obviously on paper. And then, the IRR, just because we've had some quick early markups, 164%. And so just from an overall standpoint, it's been a big win, especially because the hardest thing when you're a small fund, under 3 million for the first one, is your check sizes can be very limiting, and you can go give a company some money, but there's no guarantee they're going to go get more, right? And so we've also been, proud of the fact that a lot of these, like, we've been able to write early checks and get additional advisory shares. So we've almost doubled our ownership in most of the companies by being like, hey, we're going to write that 100 or 250K check, but we have the confidence you're going to be able to maximize this, use this, and then go get that next round done. And so that's been good. But ultimately, as we build, we want to start to insulate ourselves and be able to write those lead checks, to be able to go and put that million in or 500K or whatever it takes. And our average valuation is about 7.4, 7.5 post money. So we're getting in at the early stages, and a lot of those they're crafted. We have a lot of negotiating power with what we've built. We're not just capital. And so that's been the overall wins of the fund. From a company standpoint, one of our it's out of the box type investments is an event. And it's called Racket X. And so they wanted to bring all of racket sports to one spot. So a lot of people don't know there's something else called the PGA show. And the PGA show does buku amounts of revenue per year, 50 to 80 million. Just bringing all of golf to one spot every year. And so we saw racket sports as the same thing, and we invested in the company at a $1 million valuation because of all the leverage we have. So basically getting in alongside the founders to own a large chunk of this. They did 1.5 million in revenue last year, and they're working towards year 3 this year. And it's like, who knows, that racket sports as a whole, if you put pickleball and tennis and paddle and all these other things together, could be much larger and bigger than just golf. And it's like, who knows, if we own, a large chunk of this thing and it goes and gets 50, 80 million of revenue, what could that sell for one day on a multiple, right? We can really crush the returns on our fund from some of these alternative investments that most VC firms will pass on. Most people just won't see it, or if they do see it, they're seeing it at, too high of a valuation. So RacketX just did another round. We pro-rated at a 5 million valuation to expand into the Middle East and Europe, right? And so it's like, that's a 5X, and, they're killing it in revenue, and they've proven the thesis, and it's a completely outside the box investment that most people, they see, sports team or league or, sports tech or company in and around sports, but not the event that's bringing all of racket sports to one place. So that sort of encompasses everything in one thing, because then we've also sourced a lot of the racket sports people to the event as we see them. Hey, you got to go here. You got to go here. Right. So, that's a
so when you're picking companies like that, obviously you're leading the charge in terms of trends in sports. But when you look at let's talk to potential entrepreneurs that presenting to you first, and then we'll talk about potential investors in fund 2. So for entrepreneurs, outside of what they're doing in a particular segment of sports, what other attributes are you looking for when you get involved?
It's funny. I had a long conversation yesterday about this exact same thing. And we were talking about how all the cliche things people say are often deeply true. And the one that rings the most is like, we bet on the team or we bet on the person. And if you look at our first fund, again, I came into this with I have a finance and real estate background, by degree, but not real learning to me is always when you're in the trenches and you're actually going through these things. But I hadn't seen a full cycle. So there's been a lot of learnings. And the biggest one has been like, okay, there's 10 ideas for a certain concept, and you'll see, so they might come over a 1 or 2 year period, but there's always one standout person that is like just rises above all of them. And how do you pick them, right? They're going to if they can't go make that idea happen, the idea probably was never going to happen. And so we've just, that to me is the biggest thing of like, who are you putting around you, and just, are you going to go all in, right? Like some people try to be doing other things while building it. No, I will never invest in a founder that's doing that again, right? Or they're not all into this idea, right? They're sort of like, I think it can be. It's like the ones, they're all in, and they're checking in and they're getting updates, right? The companies that for us that are not doing as well, you rarely hear from the founders. You really get email updates. The ones that are crushing it, or the good founders, are always giving updates, good or bad. They're always calling. They're always top of mind, right? Like, so who's top of mind? Like, there's just this persistence, this go, and this attitude almost. And it's why a lot of those people that become super successful rub people the wrong way, because they just have this delusion and belief in themselves so much. It's the same one I have, where it's like, I know what we're building and it's going to be this. Well, how do I find the same type of people? How do I attract the same type of people? And then how do we go, capitalize them and go do this thing together? And so to me, that was the biggest thing, is a lot of it has just become identify those people, make sure they're building enough in the right space, in the right market, have enough of the right people. But ultimately, we can find or do a lot of that for them. We can get them the attention, or we can find them the right, advisor that knows some area really well. They just need to be the hustler that goes and makes it happen and scales it. So that to me is ultimately what I'm looking for the most. And something else, like we've built this community, and every Friday, we bring in speakers, and once or twice a month, we bring in other investors in sports to speak. And we're always shocked. We have almost 1,000 members, probably 500, 600 of them are early stage founders, and only 30 to 40 of them will show up. And it's like, it just says a lot about like, how bad do people want it, right? I just don't think enough people want it bad enough. They want to say they're a founder, they're testing, or they're scared. Like, you gotta go all in. And I've just, from the ones that have been super successful, that have become my mentors or LPs, that have built these huge companies for big exits, or built huge private equity firms, or whatever it is, they're all in, and they don't care. Like, it's like, we're going to maximize our chance. So anyway, long-winded, but it gets me fired up, because it's like, that's the fun in it.
Well, I mean, isn't it true? I mean, there's obviously a synergy between the things that make someone a successful entrepreneur and someone that makes them a successful athlete. You got to play D1 basketball, and you did that because, sure, you had some natural talent, but you spent probably more time in the gym, more time at camp, more time watching tape to be the best basketball player you could be. And the same is true for startups. Wouldn't you agree?
100%. We always talk about how the parallels between sports and business are insane. And so when you take that athlete mindset and training and provide it and put it over into business, it's quite interesting. There's not just parallels or advantages of being that athlete, right? The discipline, the ability to work together, the get through things, right? But it's also just interesting. If you look at like finding a company or finding an athlete, it's all recruiting to some degree as well. And so the sports and business worlds, they're almost identical in most facets. And so it's pretty cool to be able to use them as examples, and then to be like the paradox of like, oh, now they're combined into one. Like, now we're learning what we used in sports to find the top people building in sports, but in building in sports as a business. And do you find a lot of the founders that you're working with, you had a background in sports and had some level of success in sports? From athlete standpoint, most of them have been athletes, but a lot of the ones we've backed are coming into sports for building for the first time. We've seen that part of it is the people that have been in for so long, they get conditioned to this mindset, and they might have some of the right relationships, but that's okay. We can find advisors that have those. It's the ones that see this problem, and they come from, so of our 16 founders, 9 have already exited companies, some for 300, 400 million, some for, 20 million, like all different levels, but they've built things 0 to 1 or 0 to exit or whatever you want to call it.
Right.
And they've identified problems, whether through their kids in youth sports, or they just see it as a hot market and they see another gap, or, it's just in everyone's lives now. Sports is everywhere. It's the last, thing remaining on TV from a viewership standpoint or live viewership standpoint. And so we've seen that having that outside perspective and then being able to put the advisors around you with that is huge. And it just brings a whole different mindset and, killer instinct, to be fair, to it, where the people that have been in sports for 20 years and they want to build something, sometimes it works, but a lot of times they've subconsciously been programmed also of like what can or can't work. Right. And so a lot of ours actually, like, they might have been athletes, but they've built or been in different industries, and now they're building in sports.
Fantastic. So let's talk to potential investors of Fund Two, but let's start with what's the makeup of your LPs in Fund One, and what would be a good potential LP for Fund Two?
Yeah, so Fund One, again, like it sort of fell out of the air as an opportunity from a private equity gentleman that wanted to put money into sports, and he was like, "Hey, let's build a fund structure around what you're doing. I see the potential." And then we went in, and the rest of the LPs in the first one were exited sports founders or partners at private equity firms. So a lot of the people, again, focused in sports, but we had some external ones. One guy runs the largest private equity firm in a different alternative asset. We've had guys that own teams. We've had, all kinds of different things. And then as we go to the second one, yeah, it's just good people that want a small stake in the earliest stage of sports where honestly the real alpha is. Maybe it's not as sexy as going and putting something in a team or, one of these crazy new emerging leagues that are all the valuations are ballooned now. But it's like, this is where you're getting in at the ground floor on the next big sports, whether it's a paddle or a cricket or, India has a ton of opportunities. We have an advisor with his boots on the ground there, identifying and finding things for us. So you're getting in at the ground floor of what's next at sports. And then also you're getting all the tech enablement around it. So ultimately, we're just looking for good people. And, I think the nice thing from Fund 1 to 2 is it's basically already accounted for, and we're going to have an elite anchor with others that are going to follow on. And most of our LPs from Fund 1 have already, basically at least verbally confirmed, hey, once you have the anchor, count me in for the next one as well. So to me, I'm not worried about that. It's just whoever wants to join the ride, like this is your chance before we really take this thing to the next level and it takes off.
So what's Fund 2 look like? Obviously, your first fund was $3 million. What's your goal in terms of the size and allocation for this fund?
Yeah, that's bobbed around a little bit. It's going to depend on what the anchor ultimately decides to put on. So that's really where the negotiations around now, because we're going to give them a little bit of economic terms. Just again, the main guy was a early, investor. He was one of the first people that believed in us, and we'll take it from there. But it's going to be most likely 20 to 25 million.
Okay.
But there is some potential. We've had some other conversations where that could get larger. As there's some strategics that could also be anchors that they want this early stage, and like the momentum of this could really push it forward. But some of them also want to like place some of their people, like a lot of the later stage are trying to go a little earlier and they want to use us. But there's some nuance on the back end, but I would say realistically, this is going to be 20 to 25 million, just so we don't get too big too quick. But, I think that's a good sweet spot for the next stage of learning, for leading and co-leading. Yeah. But I've had a few, combos where people want to put in way more than that. And I don't know, honestly, if we're ready for that.
Fair enough. I appreciate your candor from that standpoint. So for people that are interested in investing in sports, why your fund and why now?
Yeah, I think it's simple on two fronts. Sports is going to be one of the best performing assets. And if you can get in at the earliest stage and the earliest things, that's where the real alpha is. And it's resistant to AI. It's resistant to any media changes. Nothing is going to take away sports. It's not going to be automated. And it is the linchpin to everything else. And it goes to so many other industries. And it's only increasing day by day. And then why us? Everyone else builds off capital or their MBA or all their their 20 years running as an associate at a VC firm. We're actually real builders. We've built this thing from scratch, and we've built something that no one else has built, which is the media engine and the community. And so we've built the greatest distribution and information advantages of anyone. And some of the other firms are trying to do it now, and they are failing at it at a great rate because that's not what they're built to do. They're just capital allocators. Capital allocation is just one sliver of what we do well. And so we're going to get the best terms, and our LPs benefit from that the most because, like I mentioned earlier, we doubled our ownership through advisory shares in the first fund. Mm-hmm. And we give all that to LPs. We don't take that I don't take that as a GP myself. I go, you believe in me? That extra, we got an extra point in that company. Nope, that's going to the LPs because the only reason we're here is because of you. So
I love that feedback. And that's obviously the reason why we launched this podcast to showcase a non-traditional investors investing in non-traditional ways with non-traditional founders and LPs. And I really appreciate that insight. So anything else you want to share with our listeners today?
No, just say I appreciate you tuning in and listening, right? Like it's awesome for those that support the ecosystem on the founder or investor lens, and you are what pushes innovation forward as people like yourself. So I always say that to our LPs. I'm texting, calling, being, as our list grows, maybe that can't always do that forever as it scales out of myself, but I go, the reason sports and the reason, for example, we own part of a emerging soccer team. The reason little Johnny's going to have a chance to be a pro athlete is because of you, the LPs. Like you don't always see the downstream. And so that's why as we started doing more events and taking people to our, whatever, it's really cool. And I'd say, think about sports from that lens as well. Not only is it going to be a great investment opportunity for you, but the impact it provides across the world is pretty insane. And it's been awesome. Like, to show up to a game and be like, hey, our LPs provided this capital, which then, provided us the opportunity to go and build this thing. And then now a kid has a chance. And now think how sports impacts his life. And then who knows, maybe that kid goes and builds the next great, league or tech in sports, right? And so there's a lot of factors from it. And so I'd say just think about that. And then number two, appreciate everyone on the emerging manager side, whether you're in sports or not, whether it's space or whatever, this is where the true innovation happens, and it's honestly what makes the world fun and advancing. So that's how I do it.
Appreciate that, Andrew. Where can people learn more about Profluence Ventures, and get access to your great content?
Yeah, profluence.com is the best spot. So you'll see the places to go and look at our portfolio on the capital side and everything that's a part of our ecosystem. And then, LinkedIn, Andrew Petcash is also a good spot. I'm pretty active there. Top voices, 30,000 plus followers. That's really where it all started, from a Profluence side. So, I'm responsive there, and it's a good place just to stay in tune with everything that we're doing, but more so, my whole thing is 90% value, 10% promotion. So you're going to get a ton of just insightful things about the space. And then, if you want to go deeper with me or whatever, then it's pretty easy.
Fantastic. Well, thank you for being on the podcast today. For everyone listening today, make sure you follow Andrew on LinkedIn. He's got some phenomenal content. Take a look at go through his website, and obviously follow, like, and share this podcast. And Andrew, thank you for being on the show today.
Appreciate it, Scott.
You know what you were saying at the beginning, and then he was talking about just all of the content that he's got, like and those followers and everything. I mean, today's world, like, this is what it takes to successfully fund something, to successfully sell it. It's as much of the hype as it is, of course, the performance of whatever it is. Both things have to be aligned, right? And so he's obviously making smart choices.
Yeah, the reality is that in order to get that alpha, get those higher returns that these smaller funds get, they really got to know their stuff, and they got to be very concentrated. And, and that's exactly what Andrew's doing. He is all in, on sports and at all levels and all stages. And that's what he looks for his founders. He's looking for people that have the same passion about what they're doing in sports as he does, as part of his criteria. So he definitely practices what he preaches.
Well, and we were talking, and the webinar we did a couple of weeks ago, or I guess maybe by the time this airs a month ago, but the webinar that we did, and Brian McMahon was talking about, injecting everything with hyper growth, and so they built a model by which they can inject it with hyper growth with their own media company.
Exactly. What he's done is that he's built a content engine, a community, and a platform to invest, and they all meld together. So his portfolio companies have access to the community. They obviously have a team with Andrew and his team to give them access to all kinds of information. So it is really a all-inclusive. It's that three-legged stool with all the legs at the same length.
The other thing that I thought was so funny about what he said there is he called that. I would have termed it. There's sort of this cockiness to professional athletes to founders that is very much aligned, but he called it a delusion and belief in themselves. I love that it was called a delusion.
Yeah, it's interesting. I think, you and I have dealt with founders and investors for, decades. And, humility is something that is hoped for, but not always expected.
Not found, not often found.
Yeah. And I think he has a good perspective. Andrew's a smart guy. He knows it. But he realizes that, he's got to surround himself with smart people too.
Well, yeah, I love that he thinks, this is my daughter calls it, that you think you're all that. That's what my teenager says, right? So he likes that they think that they're all that, but he knows that they're not, and they need him.
Yeah, I used to use a phrase, I used to call it unjustified arrogance.
I like that one too. But I think it's so characteristic of it. But I think we do, when they get so delusional about it, though, that's when you have problems. So you kind of look for that balance between being delusional and coachable at the same time, right?
You got to be confident and coachable simultaneously.
Yeah, totally. Exactly. Well, I think it's really interesting that we've been looking at some, there's been some sports gaming betting, you kind of covered in and around the sports arena for many episodes here in the series so far. And I think you have a particular interest, right?
Well, yeah, obviously I'm interested. Obviously I played sports and coached my kids and did all those things and, made some investments that had some success in the space. But the reality is if you're not talking about AI, you're talking about what's happening in sports. You're finding leagues that people don't even know about raising capital. Pickleball, who would have thought, 5 years ago, that pickleball would be the financial, phenomenon that it is today. And, you've got, I just saw a valuation of college sports teams where we most recently interviewed, Sean Clifford for Penn State. The Penn State football team was valued at $1.2 billion, a college football team. So sports is probably the next big, or it's been a great investment for a long time. The Lakers will definitely attest to that. But it's beyond just the major leagues that you're seeing now. And so I think if it's not AI, sports.
Yeah, I think that the reality is in media today that there is nothing else that can command a live audience. We just it was just announced not too long ago that Stephen Colbert was getting canceled for for financial reasons. Whether you believe that or not doesn't even matter. But I read that they were the #1 DVR'd show. And no one in advertising wants a highly DVR'd show. It means you skip the commercials, right? Skip the ads. So if we don't have live, we don't have ads being played in such a way. And so right now, that is the only game in town, literally, to get advertisements and your brand seen is to be on something live.
Right. At the time of this, recording, I think earlier this week, ESPN and Disney and the NFL rather put together a deal for the NFL to have a stake in ESPN and ESPN take over the streaming rights, some NFL programming. And so I think it's when I'm watching the financial news, it's either news about some obscenely valued AI company or some obscenely valued purchase of a professional other sports team.
Well, and the other thing that we can't forget, because this happens everywhere in retail and everywhere. And I was just reading a great story about Pac-Man, which we'll have to talk about next time we talk about a gaming company, but because they're right here in Irvine, California, where I am now. And they're celebrating their 45th anniversary, which is just making me feel really old. But they, recognizing that women love live sports and that injection of it is a high consumer base. And so it's really brand valuable for that. And my sister-in-law is a part of Aero, which is the Wi-Fi, router device that is at Amazon. She's the head of their marketing department, and they have a significant investment in NASCAR. And she has managed to turn all her siblings, including my husband, into NASCAR moms and dads, I don't know, whatever you want to call them.
Right.
And that is a huge live investment sport because there's no way you miss a second of the race and it's over. And so those are things that are going on. So we're going to have to get some NASCAR people in, I think.
We'll put that on the list.
Put that on the list. All right, everyone. We appreciate you listening. If you want to see who we're covering, what we've covered, you want to catch up with them, you want to get to their website, you want to find out about their capital funds, you got to go to emergingmanagerspodcast.com and come back and subscribe so that you come back next week and you hear who we've got as an emerging manager.
Join Scott Kelly, Tracy Hazard, and their high-performing capital fund manager guest next week on the Emerging Managers Podcast. Don't miss our upcoming virtual and live VC Fast Pitch and podcast events. For more details, background on our guests, or an application to be our next guest, visit emergingmanagerspodcast.com. Don't miss out on shaping the future of venture capital and entrepreneurship with us by joining our robust community of innovators and investors today.